Uh, in the last class, we have discussed some sort of issues, some sort of theoretical part regarding institutional framework. Now we are discussing the legal and institutional framework for public financial management. We will discuss the legal framework for public financial management in the next chapter, next session, and we have discussed some part in institutional framework. So under that we have uh, understand actually what is the organizational structure of the country, administrative structure of the country. At the top we have a president and parliament, followed by cabinet. Under that we can find line ministries. Under each line ministries, for example, Ministry of Home Affairs. Under that it's a local governance, but the line ministries, there are departments. Each ministries have its own department. The services are rendered to the public through each department. So this is actually institutional framework, how the organization's power and duties are delegated and how communications are incurred. And it's sometimes we call it as a corporate governance in when we discuss about business side organizations. And we have discussed about Ministry of Finance is an executive, and Cabinet of Ministers also executive, and line ministries also executive. So what do you mean by executive? So it government has policy. Government has proposed policy with regard to public financial management. On behalf of the government, Minister of Finance will take the responsibility. So Minister of Finance execute the government policy. Along with Ministry of Finance, cabinet we call in companies, we call it what, board of directors, cabinet. And the line ministries, the Minister of Finance allocate fund, allocate resources through budget, and they are maintaining, they are overseas the line ministries. These line ministries are accountable to Ministry of Finance, and Ministry of Finance will oversee the line ministries. The Minister of Finance can deduct to control the behavior with regard to public finance administration through circulars and financial regulation, that sort of things. So that's why we call them as executive. Executive mean what? On behalf of the government, these Ministry of Finance, cabinet ministries and line ministries are executing the policy. Now we discuss legislature. The legislature is mean what we call sometimes a parliament. Legislature. Effective budget management begins with a carefully balanced division of responsibilities between the parliament and the executive branch of the government. You already know what is who are in executive branch of the government, especially. So at the top we have cabinet of ministers, Ministry of Finance, MOF, Ministry of Finance, and line ministries are the executive people, executive officers, executive bodies. And these executive bodies should accountable are accountable to the parliament. In the parliament there are two parties. So one party represents the government, another party is representing opposition party. Even though the governing party, ruling party, has the power to execute the budget, they are answerable to the public. Public mean in the parliament you find the MPs, member of parliament, they are representative of the public. So therefore there should be a good balance. So the ruling party unable to take upper hand because of they have the power. They are dealing with public money, so therefore they are responsible, they are answerable to the parliament. That's why it says effective budget management begins with a carefully balanced of division of responsibilities between parliament and executive branch of the government. And as we discussed earlier, the responsibility of public finance is in hand of the parliament. The parliament has oversee, right? For example, how the parliament take the power with the approval of the Senate, with the approval of the cabinet of ministers. The minister of finance propose the budget. When he submit their budget proposals, there are a lot of arguments, some arguments against and the favor of the budget proposals. So the finance minister makes some adjustments on the initial proposal of budget. So that's what, so it's a for domestic country it is necessary, the careful balanced division of responsibilities between parliament and executive branch of the government. Competition for budgetary power is common, but tension between these two institutions is accepted as one of the vital check and balance of democracy. If it is democratic country, to consider a country as a democratic country, always there is a tension. Whenever the government proposes a new bill or with regard to the public finance, whenever the Minister of Finance proposes a new budget, the ruling party come up with tension because in the opposition parties, in parliament there are opposition parties, there are a lot of comments will come, so he should come across and he should deal with. If the proposal is not effective enough, sometime in the vote the opposition party will not support the budget. In that case the government it disclosed the government weakness. But in our present situation of the country, the government has enough power, so in our country we don't have such kind of tension. But as a theory, so competition for budgetary power is common, right? The government try to force their policies where the budget, since the government have enough number of members in the parliament, so they don't have much tension on that. So we have a strong government. So with a well designed constitution and organic budget law, the power of each are made to reinforce the other. So if a country's constitution designed well and some countries like US and other countries, they have organic budget law. In our country, we have annual budget law. Every year in the parliament they are proposing budget, and after several arguments, the proposed budget with some modifications come become a law, annual budget law. But some countries, they have organic budget law. It means all the fundamental things are not changed over time. So the organic budget law explains how to prepare budget for the country. So what are the macroeconomic target, socio-economic target? So that kind of things are well defined in organic budget law. But we don't have such kind of organic budget law. The annual budget law we have in our country. Due to the absence of organic budget law, time to time government changes their policy. Every year the government, whatever the government, they are in the power, they are trying to enforce whatever their ideology is. So with well designed constitution and organic budget law, the power of here they are mentioning each mean the parliament and the executive parties. The power of each are made to reinforce the other. At one side, the government has a power, and also the parliament also much power. So that's all the times there are some argument. Even though those people are in the government side, so they have freedom to express their opinion against the proposals. So that's a parliament, right? So it reinforces. In the present situation, what? So majority of them are ruling party, and opposition party is very weak. So this time the government does no need to worry about the success of their budget voting. So if the parliament is more enforced here, this government, the ruling party also have opportunity to oppose their own proposal too. So it's enforced. So it is an accepted criterion for democracy that the elected parliament hold the power of the purse. The power of the purse. The parliament, ultimately the parliament has the right to decide on what sector, or for which sector should be more prioritized. So what is the policy of the government? But in our country, every 5 year, or sometime every year, the government has changes its policies. It's based on their power. So therefore, that is, it must authorize all expenditure, all borrowing, all revenues to be collected through power of the state. So what it says, here it must authorize, right? Very important. Authorize expenditure, all borrowings and all revenues to be collected through the power of the state. So normally according to this statement, if government wanted to allocate money for spending, expenditure and borrowing, so the borrowing may be from China or India or Bangladesh, whatever, so wherever the parliament should approve it. And all revenues, what rate the tax has to be imposed, so all such things should be decided by the parliament. But unfortunately, at present situation, the country does not have powerful opposition party, so therefore the government now very strong, so therefore whatever the things they wanted to do, they can do, right? They have enough power to authorize expenditures, borrowing, revenues. And very few peoples are in the opposition party, the parliament. In apparent paradox, it is in an apparent paradox. It's kind of what complexity, right? It's a kind of puzzle. However, parliament's power is reinforced by granting a strong authority to the executive and Ministry of Finance. Now, when you compare, right? When you compare the opposition party and the government parties, ruling parties, who has much power on this? Which party has more power? All the times, all the times the governing party, the ruling party, has much power, and what? The executive parties also coming from the ruling party. So it says, implicitly it says a parliament should have the power. But ultimately the power belongs to, so the power in the hand of the ruling party. So theoretically the parliament has power, but in practical the ruling party, the executive party, has more power and they are more strong authority. So that's why it's called what? Paradox. Means a kind of puzzle. So in an apparent paradox, however, parliament's power is reinforced by granting a strong authority to the executive government and the Ministry of Finance. Parliament act by holding the executives accountable. Again, even though the ruling party has the executive, and then how the parliament gets the power again? How the parliaments gain the power? How they gain the power? How parliament get power again? So, in the parliament, ruling parties are majority. So therefore, we say they are executive people, so they can do whatever they do. But even though they have more power, more authority, again parliament holding the power. How? Parliament act by holding executive accountable. Even though very few people are in the opposition party, they will raise questions. The opposition parties raise questions. In that situations, the ruling party, the government, the executive party should accountable. So that's why you may observe the opposition parties asking so many questions. They are criticizing the government in so many ways. So in that ways, the government parties, the government ministers, cabinet members should answerable for that questions. So they can't be silent, because the parliament act by holding executive accountable. So think about think the situation where the parliament, no parliament sessions, so for example, the executive president has power to postpone the parliament sessions. So for example, in 2020, I think it almost for 5 6 months. Until the general election, the parliament, there's no parliament sessions, right? It's mean the executive parties are accountable to the parliament, but since there is no parliament session, so they did whatever they want. Nobody has right to ask questions against the ruling party. So that's why the parliament is very important. If the executive president postpone or close down the parliament for a period of time, suspend their sessions, nobody can ask questions. So that's why it's called paradox. It's called paradox. It's very it's complex puzzle. Parliament is the legislative body, and members of parliaments are elected by the people. In Sri Lanka, the speaker Sabhanayaka, we call it, right? In Sri Lanka, the speaker is the head of the parliament. Head of the parliament is the speaker, and the secretary general of the parliament is a chief accounting officer. You may have several times the word chief accounting officer come across, right? We are studying public finance management. Chief accounting officer, normally in the common public finance stock management, chief accounting officer and accounting officer. The chief accounting officer is the secretary to the line ministry. Secretary to the line ministries are the chief accounting officer, and accounting officer is head of the each department under the ministry. So in Sri Lanka, the speaker is the head of the parliament, and the secretary general of the parliament is chief accounting officer of the parliament. When you take the ministry, the head of the ministry is the minister. Particular minister is the head of the ministry, and the chief accounting officer is the secretary. Secretary to the minister is the chief accounting officer. Likewise, the parliament, for the parliament, speaker is the head of the parliament institution, and secretary general of the parliament is the chief accounting officer. Standing orders of the parliament provide for regulation of its businesses. So bills for, normally we call bills for act, proposed act. The bills passed by the parliament become law. So after the voting, the bills become the law. The bills passed by the parliament become law when the speaker gives a certificate. Sabhanayaka has to give a certificate that bill has been duly passed by the parliament. So it's called what? Appropriation Act. For example, every year in the month of November, the Minister of Finance propose annual budget, and he proposed in the parliament after several discussion and comments, and it becomes law, budget law. In the budget law, it clearly indicates how much amount of money, how much amount of resources has to be allocated for particular ministry, particular department, particular institutions, or particular government-owned business enterprises. So that allocation, the annual budget law, we call it Appropriation Act. The budgetary role and role of parliament on public finance of demographic legislature are the outcome of centuries long struggle for supremacy in public finance. The public finance, right? The in the no you think the situation where there is no parliament. So assume that uh, the executive president has dissolved the parliament. Dissolved the parliament, it means there is no parliament. But he able to run the government with their ministers, cabinet ministers. So think that situation, to whom they are accountable. To whom they are accountable. So whatever they want, they can implement. Nobody has right to ask questions against the government. So the parliament, the period called the colonial period, British colonial period. The British rulers, they prepare budget, they allocate money, they decide the tax rate. Nobody has any right to ask questions against them about their policies. That time, we call that kind of situation, we call them who's that? The rulers. No, it's not a demography. Demographic. People does not have freedom. It's not a demography. So many people will fight against the colonial regime. British people. They were fight against the British people to get freedom. So after getting the freedom, the parliament was established. So why we need parliament? Why a country, democratic country, need a parliament? The government, the ruling parties are answerable to the public. So opposition party members ask several questions on behalf of the general public. So this is what. So it's a centuries long struggle for supremacy of public finance. The budgetary role and the role of parliament on the public finance of demographic legislation are the outcome of centuries long struggle for supremacy in public finance. So the better public finance can be achievable in the democratic country in the power balance between the parliament and the ruling party. Historically, parliament first gained the right to concern the taxation. Gradually, they devised the mechanism to control the expenditure of public fund. So earlier, the ruling parties. So I think about absence of parliament. Think about the colonial period, British colonial period in Sri Lanka. So whatever the tax rate they decided, they directly implement. So after getting the independence, that was handed over to the parliament. So whatever the tax they are going to introduce, whatever the tax rate they are plan to collect, they have to take the consent from the parliament. That historically, parliament first gained the right to consent to taxation, and gradually they devised the mechanism to control expenditure to public fund. So first they concern on tax, collection of tax. Later on, the parliament has taken the power to allocate that money to public finance. So in which way? The Minister of Finance proposes budget. In the budget you can find both where the government going to raise fund and how do they are going to spend that fund, that money. So it is decided by the parliament by the way of voting. Modern budgets came to aid comprehensive legislative oversight. Parliament shall have full control. Parliament shall have a full control over public finance. So therefore, without concern of the parliament, they are unable to pay tax. So no tax, no rate or any other levy shall be imposed by any local authority or any public authority except under the authority of law passed by the parliament or existing law. So without concern of the parliament, the government does not have rights to impose a new taxes. They don't have right to change the tax rate and additional tax burdens. So this power given to the parliament by the constitution, article number 148. In Sri Lanka, parliament seems to exercise its supreme power over public finance through the role of the following. Based on the constitution, parliament seems to exercise full control, supreme power over public finance. How it is possible? First, fiscal management responsibility, finance management in corporate finance we call it. Fiscal management responsibility. What is the government fiscal strategy? So even the government has proposed the strategy, but which is subject to the approval of the parliament. Appropriation, allocation of fund and collection of money. Appropriation, so it's sometimes called by the budget law. Budget, in the budget you can find collection of revenue and expenditure, allocation of expenditure, money. So appropriation, how should the government collect revenue and spend public finance? It's a budget normally. Auditing, for what? Auditor general. Auditing has the money been spent as appropriated, and what are the impacts created. So the auditor general will monitor whether government institutes, the public fund are spent according to their allocations done by their proposed in their budget law. If there are any deviation, the auditor general department will have a query on that. Accountability, they are answerable. Accountability. So in the parliament they are accountable. If they are found any departure in budget execution, or why such departure, how should it be remedied? So this kind of things they have to answer. So if there are any deviation on such budget executions, so for example 10 billion allocated but actual spending 20 billion, so why, what has happened, what's the reason, how can it can be remedied? So this kind of things and this kind of questions will come across in the parliament. So therefore they are accountable, they are answerable for that. So you can see the legislation. So legislation is a parliament. Legislation mean what? The parliament and its subcommittees. There are committees. First, the fiscal management responsibility. What is the government financial, fiscal strategy, performance, progress? So who is in charge? Head of the state and cabinet of ministers. So those people are developing strategies. Second one, appropriation. How should the government collect revenue and spend public fund? It's called what? Appropriation. It is directly linked with budget. So who has managed that public revenue and spending? Treasury and the Ministry of Finance. Auditing. Has the money been spent as appropriated? What are the financial administrative indisciplines? Who is responsible? Who is look after this? State audit or physical monetary agencies of the state. Fourth one, accountability. How the budget was executed? What are the progress or impacts? Why the departure? How should it be remedied? So it is done by agencies and level of government. Now we'll discuss about COPA. COPA means Committee on Public Accounts. Committee on Public Accounts. The task of Committee on Public Accounts, COPA, is to probe the managerial efficiency and discipline of a government, its ministries, department, provincial council and local authorities. So COPA's scope is co-government. In the first chapter we discussed what is co-government. Co-government includes what? The government is a parliament, cabinet and the ministries and the departments. Sometimes local government, provincial councils. So the Committee on Public and Accounts are look after the managerial efficiency. The committee is established at the beginning of each parliamentary sessions. Under Standing Order 125 and consists of 31 members. It reflects the party composition in the parliament and its quorum is 4. The duty of the Public Accounts Committee, COPA, is to examine sums voted by the parliaments along with the report of the Auditor General, which is in 6 volumes. In the course of deliberations, the committee obtains evidence from secretaries to the respective ministers. The secretaries are the chief accounting officers. Head of the departments are accounting officer, not chief accounting officer. Head of departments and other responsible officers. The committee is regularly summoned. They are invite them. They summons the Director General of Public Finance, State Accounts and National Budget or nominated representatives. It's a duty of the Chief Accounting Officer. This means what? Who? Secretary to the Ministry. It is a duty of Chief Accounting Officer to personally appear before committee in order to explain and justify the financial activities of the department under the purview of the ministries. So the COPA has more power. So whenever they summon the officials should present to them. The recommendation of the committee may contain directives. Directives mean some kind of advices. to the government, department and ministries. Such directives are deemed to be those of the parliament. In the COPA, uh, there are people from the parliament, so the committee gives some suggestions to improve the efficiency of co-government organization, co-government. It's called, it includes ministry, department, so on. Copies of committee reports are distributed among respective officials of the ministries, departments, provincial council and local authorities. Now we look at COPE, Committee on Public Enterprise. So earlier we talked about Committee on Public Accounts. It was A. Now COPE. So COPA. So they deal with affairs of co-government institution. COPE. So they are in gray area. You may find government corporations and government-owned business enterprises, right? So that kind of organizations. So while the Public Accounts Committee exercises oversight in the financial performance of government institutions, the Committee on Public Enterprise has been established on 21st of June 1979 to ensure observance of financial discipline in the public corporations. Here public corporations and other semi-government bodies in which government has financial stake. The Committee on Public Enterprise, which consists of 31 members, so COPE also consists of 31 members, reflecting the party composition in the House. House means the Parliament. Is established under Standing Order 126 at the beginning of each parliamentary session, and the chairman is elected by the member of the committee as its first session. Its quorum is also 4. The duty of the committee is to report the parliament. To whom they report? Parliament. On accounts examined, budget and estimates, financial procedure, performance and management of corporations and government business undertakings. So they also investigating the accounts, investigating their managerial efficiency. The accounts of these organizations are audited by the Auditor General, and from the basis of investigation of the committee, it has the power to summon the relevant officials and other people as it thinks fit to obtain evidences and call for documents. The committee reports to the Parliament, and recommendations contained in their reports are deemed to be directives to the respective corporations' statutory bodies for due compliance. So if you want more knowledge, you can refer this textbook. And if you have any questions, you can post your questions. Any questions?